Welcome to my channel. I'm Scott, and in this video I'm going to walk you through a process of valuing Micron stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 91 billion market cap. They're trading at $82 a share and they have 1.1 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. It did grow decently from 2021 to 2022, 2.4 billion or 3.1 billion. Then after 2022, they crashed and burned. Negative 6 billion, negative 5 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. That looks really good from 2021 to 2022, 5.9 to 8.7 billion. Then once again, they crash and burn. Negative 5.8 billion, negative 6.9 billion in the trailing 12 months. Revenue is a sales for the company, same exact trend, up to 31 billion in 2022, cut in half to 15.5 billion in 2023, up to 16.2 billion in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 121 billion. We discounted those numbers back to today's weighted average cost of capital. We get a value of the company of $99 billion. We divide that by 1.1 billion shares. And we get a calculated stock price of $90. They're trading at $82, so they're trading at an 8% discount. It is a buy according to the model. But maybe I was a little too aggressive with their future free cash flow growth. I have them at negative in 2024. Then if they grow as expected, I'm projecting 5.6 billion in 2025, up to 8 billion in 2027. But let me try something different. I'm going to grow their free cash flow 10% from their 2022 levels. And then I'll just do 20% from 2025 to 2026 and another 20% from 2026 to 2027. So now it's really overvalued. So this is a conservative approach, assuming less free cash flows. So maybe it's good to wait for the stock price to come down, assuming it does come down. That's why valuation is an art, not a science. It's really the opinion of the person putting in the numbers. Which direction do you think it'll go? Do you think these numbers look like what they'll do? Or the numbers I just had previously to this? There are 62 companies in the same industry as MU, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend over 7 billion in CapEx, a lot more than the median average. They have a pretty good debt to equity ratio, a little worse than the median, a lot better than the average. They pay a tiny dividend, 0.6%. The average is 2.6%. They're doing really bad in free cash flow. The only company doing worse is Intel. They ranked 9th in market cap at 91 billion. They do have a really good price to book, 2.1. That's stock price over book value per share. We can't look at their PE or price of free cash flow. Price to sales is decent between the median and average, and they generate 16 billion of revenue, more than ADI, which is a little bigger in market cap. And their 5-year annual revenue growth rate is the worst, negative 12%. Let's look at their most recent 10Q as of 11/30/2023. We'll start off with their income statement. They show us 11/30 and 12/31/2022. Revenue of 4.7 billion, up from 4.1 billion. Let's see what the 4.7 billion represents. Here's a breakdown of the 4.7 billion. Their DRAM semiconductors, dynamic random access memory, 3.4 billion. NAND flash memory, 1.2 billion. Cost-wise, NAND is cheaper than DRAM, but DRAM is more reliable than NAND flash. That's in terms of data integrity and endurance. Here's a different breakdown of their revenue. CNBU, 1.7 billion. That's compute and networking business unit. MBU, 1.3 billion. Mobile business unit. Their embedded business unit, EBU, 1 billion. And SBU, storage business unit, 650 million. And they have an operating loss in all categories except EBU. They also have an operating profit in other. Their COGS, cost of goods sold, is more than their revenue, so they have a gross loss. That's not good. That's why the stock is tanking. They really need to work on that. Then, of course, they have other expenses like R&D, SG&A, so their operating loss is even bigger, 1.1 billion. Last year, they had a gross profit of 900 million and operating loss of 200 million. So their net loss for the most recent quarter is $1.2 billion, a loss per share of $1.12. And their shares outstanding are also up 10 million. It's currently 1.1 billion. Let's take a look at their balance sheet. Their current assets are 21 billion, current liabilities of 6 billion, so their current ratio is above 3. Their biggest asset by far is PP&E, 38 billion. Here's a breakdown of the 38 billion. Land, only 300 million. Buildings, 19 billion. Equipment, 66 billion, because they do lots of manufacturing. Construction in progress, 2.2 billion, and software, 1.4 billion. A lot of people don't realize it, but software can be capitalized. A company can only capitalize certain software if it's through an acquisition. The gross amount of their PP&E is 89 billion. They depreciated 51 billion, so the book value, the value on the balance sheet is 38 billion. So total assets 64 billion, same as last year. Liabilities 21 billion. Their biggest liability is debt, 12.6 billion. Here's a breakdown of the debt. The year the debt matures. So they have a term loan that matures in 2024 with a high interest rate of 6.2%, about 600 million of principal outstanding. The stated rate is the interest rate on the note. It doesn't take into account compounding. The effective interest rate does take into account compounding. So this is what they actually pay. The effective rate is what they actually pay. Let me know in the comments if you want more color on that. So they have lots of debt going out to 2051, and the rates vary a lot, as low as 2.77% and as high as 7%. If you take their assets minus their liabilities, you get their equity of 42 billion, 42.9 billion. They raised 11.2 billion from selling their business, selling stock. They profited 40 billion from running their business. Retained earnings is the sum of all their prior net incomes minus the sum of the dividends they paid out. And they bought back 7.6 billion of their own stock. Let's look at their statement of cash flows. Even though they reported a net loss of 1.2 billion, they had positive cash flow of 1.4 billion. Because their net income is artificially low because of non-cash expenses like depreciation. Depreciation brings down your net income, but we add it back here. So they actually did better this quarter than the same quarter in 2022 in terms of cash flow. Their cash flow was about 50% higher. They spend a lot in PP&E, 1.8 billion. Last year, 2.4 billion. In their financing section, you can see how much dividends they paid, 129 million. Last year, 126 million. They repaid 53 million of debt. They didn't add any debt this quarter. Last year, they added 3.3 billion of debt. Here's their stock price since they started trading. It looks similar to Intel's. It got really high in 2000, almost $90 a share. Then it came down a lot and didn't really grow much for about a decade. Then finally in 2013, it came back up again to 35, right back down to about $10. And it did reach its all-time high in 2021. It broke through 90. Actually in 2022, it got to like 93, 94. But the other semiconductor stocks kept going up. This came way down. It has come up in the past year, but it's trading lower than its peak in 2000, also lower than its peak in 2021 and 2022. If you look at like Nvidia stock, it just keeps going up. Their EPS looked good in 2019, really good in 2022, but 2023, it's really struggled. Similar to their revenue, it looked solid in 2022, then cut in half in 2023. Shares outstanding have been pretty steady, around 1.1 billion since 2019. Let's look at a stock on Simply Wall Street. Its last price, 82.91 billion market cap, down 1% in the past week, up 45% in the past year. Let's see what they say about the company. Micron designs, develops, manufactures, and sells memory and storage products worldwide. They operate through 4 segments: Compute and Networking Business Unit, Mobile Business Unit, Embedded Business Unit, and Storage Business Unit. We saw that early on their financials. These were all acronyms: CNBU, MBU, EBU, and SBU. They were founded in 1978, 46 years ago, headquartered in Boise, Idaho. Simply Wall Street's at 35 a share. They say the stock is 136% overvalued. 34 analysts priced this stock at 95. Their revenue back in 2013 was 8 billion. Then it grew a lot over the next several years, up to 32 billion in 2018, down to 20 billion in 2020, back up to 33 billion in 2022, but it's come down quite a bit. It's currently 16 billion. And their forecast for 2025 is 32 billion, 2026 35 billion. Here's their dividend yield since 2021. It was 0.5%. It got up to 0.8% in 2022, but it's been coming down because the stock price has been coming up. It's currently 0.6%. The forecast is also 0.6% by 2026. The CEO's salary is $1.3 million, total compensation $25 million. His tenure as CEO is almost 7 years. In the past year, there's been lots of insider selling, no buying. Almost 300,000 shares have been sold by insiders in the past year. 82% of the company is held by institutions, 18% by the general public. Vanguard is the biggest shareholder at 8.5%, BlackRock at 7.8%. The investment company Sanders Capital, located in Florida, 2%. The investment firm Voya, located in Connecticut, 0.8%. Orbis, the Hamilton Bermuda Investment Fund, 0.6%. Their employee count was 31,000 in 2013, peaking at 49,000 in 2022. It's currently 43,000. The ticker trades on the Nasdaq, Mexican Bolsa, Xetra, Deutsche Börse, Swiss, London Stock Exchange, Borsa Italiana, Wiener Börse, Lima Bolsa, Kazakhstan, Bulgaria, BATS Europe, Sao Paulo Bolsa, and Buenos Aires. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.